According to the Euro-American dollar and British pound-American dollar trading charts, the situation has barely changed. Yesterday's surge in market volatility can be attributed to pretty upbeat statistics on the US labor market, which proved to be stable. Data on US existing home sales was also quite positive despite high interest rates and borrowing costs. Things remained unchanged even though Germany reported that producer prices were up 2.3% in September. Notably, yesterday's spike in the second half of the day stemmed from the news that British Prime Minister Liz Truss announced her resignation. Truss was in office for just 45 days, making her the shortest-serving Prime Minister in British history. She triggered a massive market turmoil by unveiling a huge package of tax cuts worth £45 billion. All this resulted in a major sell-off in the bond market and a drop in the value of the British currency, which forced the Bank of England to step in order to stabilize the situation. Many expect Rishi Sunak, who ran against Truss in the Conservative leadership election this summer, to become her successor. Let's see. Meanwhile, Truss will remain in her post until the end of October. Today's macroeconomic calendar is bereft of any important releases except for UK retail sales and the European Union Leaders Summit. British retail sales are forecast to decline a bit, which is not a good sign for the economy. This will most likely prompt the Bank of England to act more aggressively. In addition, traders may take notice of speeches by Fed officials and the Federal Budget Balance Report. Therefore, the euro and the British pound will remain under pressure. Now let's consider the quotes dynamics from a technical point of view. According to the 1-hour Euro-American dollar chart, it is worth focusing on the resistance level of 0.9801. At this mark, I recommend going short amid a false breakout. Likewise, short positions on a false breakout can be considered at the level of 0.9832. Alternatively, you can make a profit by going short on a rebound at 0.9871, the upper boundary of the sideways channel. Of course, bulls need to protect 0.9758. If the price goes down and forms a false breakout at this mark, a buy signal will be generated. In this case, the European currency will have a chance of rising to 0.9801 and 0.9832. If bulls fail to gain control of 0.9758, the price will most likely break through and fix below this level. Its bottom-up test will lead to a further increase in the volume of short positions. Thus, the euro will dip to 0.9719 and 0.9679. At the level of 0.9679, it will be possible to go long on a rebound with a view to catching an intraday correction of 30-35 pips. Long positions at 0.9719 can be opened only in the event of a false breakout. Please note that today's macroeconomic calendar is not rich in significant reports, so technical analysis come to the fore. As for the British pound, the situation is similar. The pair is trading, is upside momentum driven. Truss resignation seems to have fizzled out. A false breakout at 1.1235 and 1.1284 will create a sell signal. In this case, the pair's bearish correction will continue, thus dragging the pound sterling further down to 1.1174. If the price breaks through this level and tests it from the bottom up, short interest will rise. Thus, the British currency will slide to 1.1124 and 1.1074. At the mark of 1.1074, traders may go long on a rebound, hoping for an intraday correction of 35-40 pips. Long positions at 1.1124 and 1.1174 can be considered only amid a false breakout. Short positions on a rebound will be relevant only at 1.1332, the upper boundary of the sideways channel. In doing so, you can count on intraday correction of 35-40 pips. Good luck and have a great weekend.